Doing green industry business leaders. This is episode number 27 of the Green Industry Profits podcast, where we talk about how green industry companies can grow in a profitable way. In today's episode, we had a conversation with Greg Garcia of Rancho Mesa Insurance Services. We dive into the types of insurance you should have as you scale your business, common mistakes companies make with insurance, the data and metrics to track, and much more. And before we dive into this episode, just a quick note that this podcast is brought to you by Cycle CPA, a remote accounting firm that works specifically with green industry businesses. For more information, go to cyclecpa.com. And without further ado, let's get into today's episode. All right, everybody. Super excited here. We got Greg Garcia with Rancho Mesa Insurance Services, based out of San Diego. Always hear
Yep.
good things about there. I know Carla, my wife, had spent some time there as well.
hmm
Probably the only thing keeping us over on the East Coast is just the fact that family's still here. But we hear awesome things about San Diego.
Yeah.
Uh, but yeah, no, and I know you guys are definitely known within the green industry, so I'm sure a lot of people have heard of you guys. But
hmm
I guess Greg, if you don't mind, maybe just kind of sharing a little bit of your background and how you got into the industry and
Yeah,
insurance, things like that.
definitely. Yeah. So, hey, thanks for having me on, Joe. I was when you reached out, I was really looking forward to this opportunity, and I think we can get some good questions answered here today. But yeah, a little background about myself is I didn't always do insurance. Before insurance, I actually played Major League Baseball for 6 years. So, baseball player was my first career. Got drafted by the Cardinals. I played with them for 4 seasons in St. Louis. And then actually played my last 2 seasons in the major leagues with the San Diego Padres. So got to play my hometown team. After the 2020 season, there was no more major league opportunities out there for me. And I was fortunate enough to be able to fall back onto what's a family business for me. Rancho Mesa Insurance was started by my father, Dave Garcia, 25 years ago. And it was something that was kind of intriguing to me to get into. Not only that, but my brother, Drew Garcia, also works here as well, and he was the one that got into the family business before me and was kind of just like your every other broker, a generalist, right? Where they're just they're insuring friends and buddies and electricians and plumbers and anything they can get their hands on. And Drew was a former baseball player as well and did not really like that aspect. He wanted a competitive advantage, so he says, okay, I'm just going to go focus on the landscape industry because at the time Rancho Mesa wrote two large landscape companies here in San Diego, so he kind of started doing focusing on that, which was unique, and starting to go to industry events like NALP, Aspire, and a couple of other peer groups that we kind of attend now. And by doing that, we've been able to build, and I'll kind of share my screen here to kind of where we're at in terms of volume. Let me see if it'll go. Can you see my screen, Joe? Is that pop? Did that pop up or no? Let me see.
I can't see yet.
All right. How about now?
There you go. Yep.
That work? Okay.
Yep.
Yeah, so here's just kind of a quick synopsis of kind of where we're at. We call ourselves the little green team unit. Rancho Mesa is comprised of about 60 employees, and we have three producers and probably about 12 service staff. So 15 total people at Rancho Mesa dedicated to the green industry. Other silos within Rancho Mesa for different trades. But for the green industry, we're about 15 people here at Rancho Mesa. And we're kind of comprised of 90 companies, about 8,000 employees, and 4,000 vehicles. So that was a number that has taken us probably 3 to 5 years to get to, and we don't see that number slowing down anytime soon. And we were kind of talking off air, Joe, how it's nice now when you get to this point of this type of size and volume, you really get to pick and choose about who you want to work with, which makes work more enjoyable, right? You're not just kind of taking on any and every opportunity. I'm sure a lot of the landscapers can relate to that too. When they started their companies, they're probably just whatever they can get their hands on, they're gonna do. But at some point, you get to that point where it's like, okay, no, I can say no to this opportunity, or I can move away from this opportunity, and that's kind of where we're at. So really enjoying what I do. Would always love to be a resource for anybody within the green industry. It's a great industry. I'm happy to be a part of it, and that's kind of a quick little synopsis of myself, Joe. If there's anything else that you need on that, we can talk about it, or we can get into some of the questions we were discussing.
Oh, that's all great stuff, Greg. And no, I love your your guys' approach with what you do in the insurance space for the industry. But starting from the elementary level, you mind giving kind of
Yeah.
an overview of insurance within the green industry?
Yeah, no, that's a great question, and I think insurance 101 for the green industry is comprised of a few policies that I'm sure everybody's familiar with. You have work comp, general liability, and auto. Those are three pretty standard policies that most people have heard of. Now, as you start to expand and grow your business, there's other lines of insurance that come into play. If you own a building or have any, business personal property, that would bring in the property line of insurance. As your equipment fleet, grows and you get more equipment throughout the years, that's when you would bring on what's called an inland marine policy that would cover insurance for all of your equipment that you have. And then finally, as you continue to grow and scale, there's a policy called an umbrella or excess that a lot of clients will require for their certificate requirement. So that brings in that excess or umbrella. And then it keeps kind of compounding as you grow and grow and your exposures change. But we have a few ancillary policies that we'll talk to our clients about every single year because we do feel like landscapers have a gap and they could fill it with these policies. And that would be employment related practice, EPL. So that would be claims arising out of wrongful termination, wage and hour disputes, sexual harassment, things like that. Also, a professional or pollution combo policy. Professional would be the landscaper's kind of mistake, professional mistake. They said, hey, remove this tree and plant it over here. And something gets mixed up with the plans and they remove the wrong tree. Now that tree dies. General liability would not respond to that claim, but your professional policy would respond to something like that. And then finally, we'll talk about cyber, and that has really kind of taken off over the last few years. We get phishing emails here every day at Rancho Mesa. I'm sure everybody else does. Click this link and you type in some sensitive information. So those are kind of four other ancillary policies that we'll talk to yearly with our clients, and we can get them quoted and kind of talk about the gaps that we feel like we're covering in those. So those are kind of the brief 101 of insurance policies that we're talking about, daily with our clients.
That's awesome. And
Hmm.
now, I would imagine that there's some insurance providers out there where it could be the lowest cost option,
Yeah. Yep.
but I'm sure that there's things in the back end that are not really going to benefit the customer, right? If something does happen. Um,
Absolutely. Yeah. It's like anything else. And I always talk to my clients about that too, is because if you're a landscaping company and you're known around town as being just the cheapest price, nobody wants to be known as that, right? Most of your landscapers are saying, no, our price is based on the product that we bring to our clients. And they're okay paying maybe a little bit more because we're better than ABC Landscape that's charging 10% less, but they like our service. I would say it goes the same thing for your insurance carriers. And when you're picking and partnering with an insurance carrier, to kind of Excel spreadsheet that process and just take the lowest bid every year, I think, like you said, Joe, can set you up for some failures. And sometimes those lowest prices will, like you said, will bring on some different challenges. A lot of times within the work comp industry, a couple key factors that I would always ask for my insurance carriers is that how they handle claims. Are they handling claims in-house from the carrier standpoint, or are they using a third party, a TPA, to kind of handle their work comp claims? That's a big deal. Making sure that you have a work comp carrier that's kind of handling claims in-house. So yeah, that's a great point that you bring up, and it's not always about price. Price is very important, especially in today's age. But we never want to sacrifice price for coverage gaps or servicing issues. Those are two main points that we're always looking at. So yeah, great point there, Joe.
yeah, absolutely. And yeah, because I think when you're looking at especially the overhead costs of companies, it's important to understand that, yeah, some of these costs we can really look at from just, okay, how can we minimize these, whether it's utilities or other supplies and stuff like that. But I think
Yep,
things like insurance or marketing or these things that maybe you should approach more from an ROI perspective, or, okay, what is the right thing to do for the company to move forward and continue to provide our core services, right? And continue to support it.
absolutely. Yeah, well said. Well said.
No, those are great points, Greg. And there's companies that are going to be listening to this that are just starting out, along
Yeah.
with companies that are more established? I know you kind of listed some of the things that you could potentially add on. What are those core offerings that you would recommend? Is it workers' comp, general liability, and auto, or are those the core items?
Yeah, like I said, I think that exposure changes kind of as you develop. I think if you're a company that's starting out, you can get what's called a BOP, business owner policy. So a BOP would be general liability and property. It's designed for small business, kind of those starting out landscape companies that you were talking about. And then usually in those BOP policies, they're also attached an auto and excess policy to that. The other thing that you're going to want to get is as you start to get employees, right, you need to get what's called workers' compensation insurance. That would be the other important factor to have in your policies, even when you're just starting out. So those are the four main ones. General liability, auto, work comp, and then potentially excess. And what the excess policy does is it basically it's just an umbrella over all of your policies in case you have a catastrophic claim that exceeds your policy limits. That's when your excess policy would come over. If you did not have that and a claim exceeded your limits, then potentially that claim could start liquidating from the company, and that's where we can see companies kind of going out of business. So we always call it kind of the sleep easy insurance. It's just a nice safety blanket guarding against a catastrophic event that you might have. So yeah, those are some of the four that I would recommend starting out. And Joe, we kind of talked off air here. If any of your clients have any questions, would like to do any kind of policy review or anything like that, I'm more than happy to do that and just kind of give my 2 cents on it. So yeah, please use me as a resource. Or if there's any questions that's come, I'm sure I'll share my email and phone number with anybody who needs any questions.
Awesome. Very
Yep.
nice, Greg. And I know we had touched briefly on just the cost
Yep.
of the insurance premiums. I guess what are factors that affect that?
Yeah, that's the $1 million question, right? Is premium costs, and it kind of varies from a couple lines of insurance. But there's three major things that cost is going to contribute to your insurance premiums. One, for the work comp especially, would be your experience mod. Let me just pull something up really quick. It's a KPI dashboard that we use here. Let me share my screen again. I'm not the most tech savvy, but I'm all right. I'm hanging in there. So give me a second. Can you see my screen, Joe?
Yes. Yep.
Okay, perfect. So this is a sample KPI dashboard of an experience mod. All of our clients have access to this. The biggest concern and question that we had when we were starting out was, what is an experience mod? Where is my experience mod going? And how is this affecting my work comp premiums? Your experience mod is tied to your workers' compensation insurance annual premiums. So the baseline experience mod is 1.00. That would be industry average. That's a flat experience mod. Now, from that, you can go above a 1.00. That would be called a debit mod, or below a 1.00. That's a credit mod. And the importance of knowing what that is how it's going to affect your premium. So a debit mod, any mod above 1.00. So for all you landscape clients out there right now, think about your experience mod. If you're above a 1, you have what's called a debit mod. And that's saying that in relations to the industry, you are more adverse in terms of handling risk. You have more claim costs than what you're paying out in premium. Your loss ratio is not good. So before an underwriter even starts to underwrite your account and starts to add either subjective credits or debits to your account, it's already going to debit your account when you have an experience mod above 1.00. So important to know, and a goal of all of our clients is to get that experience mod below 1.00, because conversely, then you'll have what's called a credit mod. And now, before that underwriter is even looking at your account, anything to even look into, safety regulations, loss history, you're getting a credit on your work comp premium. So it's paramount that to try to drive claim costs down, try to limit claims, because if you do that, your experience model will be below 1.00. And what this KPI does for our clients is it just sheds some light on it. Why is my experience model where it is? And we could do a whole nother podcast on this. I'm not going to get too far into it. I can send you this, Joe, email, and if anybody wants to take a look at it or have any other questions on it, Like I said, that could be a whole nother conversation that we can go into all of this, but something that our clients really enjoy. They enjoy seeing it, and it really brings some clarity to kind of where your experience mod is at and where it's going. The other two things that an underwriter is going to look at when they're looking at your account would be your loss ratio. And we kind of already touched on that. And that's not just for work comp. Now that brings in the other lines of insurance. So auto, general liability, property, inland marine. An underwriter is going to take a look at your loss ratio. And what your loss ratio is the amount of premium that you've paid out divided by the claim cost that you've incurred in that policy year. So any given year, an underwriter is going to look at least 5 years of loss run history. That would be the current year and the 4 previous years. So I know in most of your guys' submission process, when you're talking to your agent, that's why they're asking for 5 years of loss run history, because that's what an underwriter is looking at. Now, what an underwriter would like to see a loss ratio be at would be right around 30% or lower. That's when an insurance carrier feels like they're profitable, because as you have to imagine, an insurance carrier, they have their overhead that they have to pay. And this isn't a charitable foundation. They need to be profitable on their accounts. So that 30% number gives them enough buffer where they can still pay their overhead, pay their employees, pay out the claims, and still be profitable on the account. Now, the lower that loss ratio is, you get it below 10%, 15%, the better your account is going to look to an underwriter. And then the last thing that the underwriter is probably going to look at is processes that you have in place. How are you being proactive to try to mitigate claims from happening and becoming the safest company that you could be? So a couple of examples of that would be, fleet safety. How often are your drivers being trained? How often are you looking at, do you have any kind of tracking devices in your vehicles, GPS, dual facing dash cams that are tracking, driver intangibles, whether they're speeding, harsh braking, things like that. On the work comp side of things, are you wearing proper PPE, protective equipment? Do you have a heat illness prevention plan in place? Are you doing a stretch and flex program before daily work? All of those things are proactive approaches to help mitigate claims. And it's something where an underwriter can go, yeah, ABC Landscape is doing all these things. I'm going to get really aggressive to try to write this account, because everything I'm seeing in terms of loss ratio, their processes in place, that this account isn't going to have claims, which means we're going to be profitable writing it even at this aggressive rate. So those things are really, really important. And in the landscape industry, I wanted to touch on one more thing in terms of really what an underwriter is looking at for your work comp. So let me share the screen again. Give me one sec. I know I'm bouncing around with my eyes and everything like that. So down here, what we do, can you see my screen, Joe? Just always
Yep.
unconfirmed. Okay, perfect. Down here, this section of the KPI, I wanted to touch on it because this kind of goes into what I'm talking about. What we do is we track all of our landscape clients against the industry. So we pull for California, and actually for most states, 0042 is a governing class code for landscape. We don't have in California the 9102, which would be the maintenance class code that other states, some NCCI states might have. But down here, what we're tracking is your average claim cost against industry average, your indemnity rate. So that would be lost time claims that are resulting in temporary disability being paid out. Now, this is just for work comp. And finally, frequency rate. And all of these factors are based on $1 million of payroll. So if I'm looking at this sample KPI, we're saying in average, this is a California one, on average in California, the industry average for average claim cost is $49,000. Well, ABC Landscape average claim cost is $28,000. The industry average for indemnity rate is 0.7 per $1 million of payroll. So for every $1 million of payroll, they're averaging out to almost have one indemnity claim per year, per $1 million of payroll. This client has a 0.4 indemnity rate, so better than industry average. And then finally, frequency rate per $1 million of payroll. Industry average is 1.8, so almost having two claims per $1 million of payroll. This client is 1.6, so still below industry average. And I'm using this KPI and I'm using these metrics, if they're favorable in my submission, in order to try to get some of that subjective crediting that we're talking about. Because I know underwriters are looking at these three categories for work comp especially. I know that was a lot, And you almost wish it was more interactive, or maybe there was questions and things like that. So if any of this is confusing to any of your clients or anybody listening, please reach out to me. Joe can facilitate something to get us together. But that's kind of a brief, not really brief, kind of a chaotic way of talking about insurance premiums and kind of how they're derived.
Yeah, awesome, Greg. And
Yeah.
I think that's a perfect example of why it definitely pays off to work with a provider that specifically works in the green industry. Are there
Yep.
any other areas where you feel Rancho Mesa really can kind of operate and really kind of operate more from a competitive advantage perspective?
Yeah, I think the other thing that we offer here is we have an in-house work comp claim advocate. So it works for Rancho Mesa, but what his job is to do for our clients is look at all of their indemnity work comp claims, open indemnity work comp claims, and making sure that he's working alongside with that adjuster of that work comp carrier to make sure that claim is being handled properly. That's a really important feature. And I would say for those landscapers that are listening to this, if you're not looking at your open work comp claims on a quarterly basis, that would be a good process to start to initiate with your broker as well as your carrier and saying, hey, I'd like to meet once a quarter and talk about any open indemnity claims that we have. How are they progressing? Are any of them going to get closed out soon? Get really involved with that. What we do here is we have Jim that basically does all that work for you. And because I know, especially as you're starting out, if you're a landscaper that's just kind of starting out, you're doing a lot. You might be owner operator. You don't have time to to go and have a claim review. But as you start to grow and delegate processes to other people, that's something that we felt like, okay, we can help take that load off of our landscape clients. So doing that, my brother Drew just did a podcast. You can check it out. I'm sure Joe can share our link to our website. It's a podcast on contract reviews. Now's a great time to start reviewing current subcontracting agreements as well as contracts that you're signing with clients. A lot of times, I think maybe in the past, these contracts have not been reviewed by an attorney. They haven't been red penned, and there's a lot of ambiguous wording in these contracts. And we're starting to see some slip and falls or some claims that our clients might be brought into because these contracts have not been reviewed. So taking some time, reviewing your subcontracting agreement and your contract that you have with your clients is super important and something that everybody should start to do now. Don't wait till it's too late and get those things reviewed. There's a lot of good resources out there, labor attorneys and attorneys that can kind of help you facilitate and red pen some of these contracts to make sure that you're indemnified in case of an accident with either a subcontractor or a client that you're working for, a property manager or something like that. So yeah, there's a couple other things for sure.
Awesome. No, that's a great piece of advice there, Greg. And
Yep.
yeah, definitely when it comes to those contracts, not something to just look at yourself. Definitely,
Yep.
yeah. But no, awesome. And so you do a lot of work within the insurance space. What are some of the common mistakes that you see contractors getting into?
Yeah, I think for us in terms of safety is not taking the time to have a complete safety program and really honing in on that. And the one I want to talk about is the biggest pain point I think for every landscape contractor. I don't care if you have 2 trucks or 200 trucks, and that's going to be auto. The auto market continues to harden year after year. You're seeing increases year after year, even if you don't have claims. Work comp, you're able to control that a little bit more with your experience mod, right? You can see rates going down year after year as long as your experience mod is staying under that 1.00 threshold. With auto, you could not have claims for 5 years and you're seeing 8 to 10 to 18% increases year after year. And the reasoning for that is because carriers have a loss ratio that's above 100%, meaning the premium that they're collecting for auto, they're paying out more in their claim costs. So they're losing money on that. And that's why they're saying, oh, we need to keep taking increases. We need to keep taking rate because we can't charge enough right now to be profitable on this line of insurance. So how I'm talking to some of my landscape clients about that now would be NVR guidelines. I think this is something that's really overlooked. NVR is a motor vehicle report. And it's something that every landscape company should get. It needs to get from any of their employees that are going to be driving company vehicles. And what you want to have is you want to have an internal guideline for that process. A lot of people just say, "Oh, I just send it to Rancho Mesa. They run the MVR and they tell me if this employee is good to drive or not." I think what carriers want to see now is they want to see ABC Landscape having their own internal guidelines for what's an acceptable driver, right? Who's able to get behind the wheel of a commercial vehicle, and setting those guidelines. A lot of some strong guidelines would be like, they're 21 years or older. They've had their U.S. license for 3 years or longer. They're doing, annual driving tests. They've done a road test for our company. They're competent in doing driving with a trailer. And then also, like I talked about earlier, if you have any of those GPS dual facing dash cams, that's giving you that's generating that data on your drivers to utilize that data. If Greg Garcia is a driver for your company, and I've had 3 infractions this month of speeding, harsh braking, and not wearing my seatbelt, something needs to be done there, right? You don't want to wait till it's too late and now I'm getting in the accident for your company, and you could have maybe done something about it, whether that be a driver training or something like that. So
Yep.
I think honing in on fleet right now should be everybody's top priority. And if you want to try to take some more control over those annual insurance increases on your auto, there's other programs that you can take on, whether that be an auto liability deductible, putting a little bit more skin in the game for your auto insurance premiums to try to lower that upfront cost, because you're saying, hey, I'm not having claims. Why am I paying 18% more every year? So there's programs out there. The issue with that, size really comes into play on that. It usually doesn't make sense with a fleet maybe smaller than 25 units, and that's trucks. As you get above that 25 threshold, it starts to make a little bit more sense. And then also the other tough part about that is that there's not a lot of carriers that can offer that type of program. Pretty selective in terms of what carriers are able to actually offer that. So those are just a couple points that I'd just like to make on that, and maybe some common pitfalls that I'm seeing within the green industry of people not taking fleet safety all that serious, and just especially in terms of driving guidelines.
Yeah. Yeah, absolutely. I mean, these are things that a lot of people probably aren't paying enough attention to. So
Yeah,
definitely
definitely.
important to kind of shed some light on this. Um, and Greg, as we're wrapping up here, anything else you'd like to kind of share with the community in regards to the insurance world?
No, I think I know that was a lot. I felt like I just threw up on the screen there, but there is a lot that goes into it. I know we had a limited time to talk, Joe, so I wanted to try to get as much content out there as I can. Hopefully, this podcast you're able to kind of rewind or pause it or something at some point. But use me as a resource for anybody that's listening or watching out there. I want to help. I'd love the opportunity to maybe partner with some people out there. But yeah, continue to utilize me as a resource. The insurance market for landscapers is getting harder and harder each and every year, especially as your operations continue to grow. So anything that I can do to help out anybody, would love the opportunity. Also, if you go to any of the industry events, take a look out, see if Rancho Mesa is going to be there. We sponsor a few events throughout the year. Would love to meet you guys in person. And yeah, thank you so much, Joe, for this opportunity. I really appreciate it. As funny as it sounds, I really enjoyed talking about it, and trying to give some knowledge out there to your listeners.
Awesome. Yeah, I can definitely um understand that, and I could definitely sense the energy, positive stuff going on. But yeah, and what's the best way people can reach out if they have questions? I know you
Yeah,
had
I
mentioned your
think
email.
let's do email. Yeah, email would be best, and that way I can get that. So a good email for me would be ggarcia@ranchomesa.com. And then Joe, I think you have my email, so if anybody, you could send that out, or put it in the link or whatever you want to do for this, for spelling and things like that. But it's spelled kind of how it sounds.
Awesome. No, that's
Yeah.
that's phenomenal stuff, Greg. And listen, thanks again for joining us here. I have a page full of notes myself, and hope others took notes like that as well. But yeah, hope you have a nice day. All right, Greg.
Awesome. Thanks, Joe. Thanks for having me.
All right, see you.